Nobody wants to be audited, especially if you're running a business. Audits can be stressful, time-consuming, and expensive if mistakes are found. But the good news is that most audits happen because of avoidable red flags. In this video, we'll break down what you need to know about CRA audits, the mistakes that businesses commonly make, and how to avoid making costly mistakes with your business. Staying compliant and audit-ready is the key to running a successful business. So let's dive in. Did you know that CRA conducts audits to ensure businesses are following tax laws and paying their fair share? Let's break down why audits happen, how they work, and what to expect if your business is selected for one. The CRA conducts audits for three main reasons: to make sure businesses comply with Canadian tax laws, to promote fairness in the tax system, ensuring everyone is paying their fair share, and three, to verify that businesses receive the appropriate benefits or refunds they're entitled to. Ultimately, audits are about maintaining trust and integrity in the tax system. Think your tax return is safe from an audit? The CRA doesn't just select businesses at random, they use a risk assessment process to find red flags. Here's what gets you on their radar: the likelihood of errors in your tax return, signs that your business might not be complying with tax obligations, how your business compares to others in similar industries, and findings from other audits or investigations. If your tax return raises any of these alarms, it could trigger a full CRA audit. The CRA is on the lookout for anything unusual or inconsistent, so don't let that be you. So what happens if your business gets selected for an audit? A CRA auditor will contact you by phone or mail to schedule the audit. Audits can happen on site at your business or at your accountant's office or even remotely. During the audit, the CRA will review your records, which could include business documents like ledgers, invoices, receipts, and bank statements, personal financial records such as credit card or bank statements, records from related parties like family members or business partners if they're relevant. If you get the notice that you're being audited, don't panic. It's not as bad as it seems. Here are a few things that you can do to make the process go as smoothly as possible. Keep your records organized. Ensure your receipts, invoices, and financial statements are categorized and easy to access. Separate business and personal finances. This avoids confusion and makes it easier to justify expenses. Review your tax filings. Double check your returns for any errors or discrepancies before the audit starts. Be cooperative. Respond promptly to CRA's requests and provide clear answers to their questions. By following these tips, you can approach an audit with confidence and reduce potential disruptions for your business. At the end of an audit, there are three possible outcomes: no adjustments, everything checks out, and your tax return is accurate. Reassessment, the CRA finds discrepancies, meaning you might owe more tax or even be entitled to a refund. Dispute, you have 30 days to agree or disagree with the findings. If you disagree, you can provide more information or escalate the issue to an appeal. Understanding these basics can help you stay prepared and avoid surprises. Next, we'll dive into the most common mistakes businesses make that can trigger an audit and how to avoid them. Even some small mistakes can trigger an audit, so here are some of the most common red flags the CRA looks for in businesses. The number one thing to look out for is when your income numbers don't match up. For example, if your tax filings show different income than what's in your financial records, it can raise some serious questions. Mismatches with CRA data or third-party reports like T4 or T5018 slips, or inconsistencies with your bank records are common triggers. The key is to ensure that all your income is reported accurately and consistently. Claiming too many expenses or the wrong kind can also catch the CRA's attention. Meals and entertainment are one area the CRA watches closely. They only allow you to claim 50% of these expenses, so overclaiming more than that is a red flag. Plus, if you don't keep proper receipts or can't prove the business purpose of those expenses, you could be in some trouble. Check out the video linked below if you want to learn more about deducting meals and entertainment expenses. Travel expenses are another hotspot. The CRA often sees claims for personal vacations disguised as business trips. Without itineraries, agendas, or travel logs to back up some of your claims, you're at risk of an audit. Make sure your travel expenses are clearly documented and directly tied to your business. Another important one is cash transactions, especially in industries like retail or hospitality. If your business deals with high volumes of cash deposits or withdrawals, it's essential to keep detailed records. Failing to document or properly report these transactions can make your business look suspicious to the CRA. The CRA is cracking down on businesses that misclassify workers. If you treat employees as independent contractors to avoid payroll taxes, you could face back payroll taxes, penalties, and interest. It's important to follow CRA guidelines to ensure your worker classifications are correct. We also have a full video on the topic of employees versus contractors linked below if you want to learn more there. Errors in GST and HST filings are a common reason for audits. Not remitting the GST and HST you collect from customers is a serious issue, and so is overstating your input tax credits by including ineligible expenses. If you use business assets for your personal purposes, make sure you're adjusting your filings accordingly. The CRA expects businesses to operate with a reasonable expectation of profit. If you report losses year after year, the CRA might question whether your business is legitimate or just a hobby. Similarly, profit margins that don't align with industry standards can raise some eyebrows. To avoid this, make sure your financials reflect a clear and sustainable business model. Home office and vehicle expenses are often overclaimed, which can flag your business for an audit. Overestimating the percentage of personal space or vehicles used for business purposes is a common mistake. Without mileage logs, receipts, or proper calculations, your claims might not hold up, so be diligent in tracking and calculating these expenses. There are a few additional areas where the CRA tends to focus during audits. If you're classifying personal drawings as business expenses or including personal items like gym memberships as deductions, the CRA will take notice. Make sure these expenses are clearly separated from your business finances. Shareholder loans are another area of scrutiny for the CRA. If you take a loan from your company and don't repay it within the required time frame, it could be treated as a taxable benefit. To avoid this, follow CRA rules carefully and keep detailed records of any loans. We have a deep dive on that subject of shareholder loans linked in the description below. By avoiding these common red flags, you'll significantly reduce your chances of an audit. Next, we'll look at the steps you can take to stay compliant and audit ready. Now that we've covered the common mistakes that can trigger an audit, let's talk about how to avoid them in the first place. With a few proactive steps, you can keep your business compliant and reduce your audit risk. The foundation of good financial management is having the right tools in place. Using reliable accounting software like Xero or QuickBooks can help you stay organized and automate the tracking of income and expenses. These systems also make it easier to generate accurate financial reports, which are essential to your tax filing. When your records are clear and consistent, it's much harder for errors or red flags to slip through. Documentation is your best friend in the event of an audit. Keep receipts, contracts, and mileage logs for all your business expenses. Organize your records so that they're easy to access and well categorized. For example, keep your personal and business expenses clearly separated and ensure your receipts include all of the necessary details like dates and business purpose. The CRA expects your records to back up every claim you make, so don't leave anything to chance. For our best advice on documenting your transactions, check out the video linked below. Even the most diligent business owners can benefit from professional advice. Working with an experienced accountant can help you review your financials and ensure your tax filings comply with CRA rules. A professional can also catch errors you might miss and provide guidance on complex areas like GST and HST filings or employee classifications. Think of it as an investment in peace of mind. If you are on the lookout for an accountant, check out Avalon Accounting. We love helping business owners and reducing their stress. If you do receive a notice or request from the CRA, don't ignore it. Responding promptly shows that you're cooperative and organized. I know it can be tempting to put your head in the sand when you see a notification of CRA mail. However, it's so important to address any errors or discrepancies as soon as possible to prevent small issues from escalating. The sooner you engage with the CRA, the easier it is to resolve concerns and avoid penalties. By implementing these steps, you can protect your business from costly mistakes in audits. Staying organized, compliant, and proactive will save you time, stress, and money in the long run. Now, we've covered a lot about CRA audits, what they are, the common red flags to watch for, and how to avoid them. Understanding how CRA audits work can help you steer clear of mistakes that could trigger one. Prevention starts with reliable systems, proper documentation, and professional advice to keep your business compliant and audit ready. Now, if you found this video helpful, there's more where that came from. Check out our video on how to pay less tax for some practical tips to keep more money in your business. And if you're a freelancer looking for guidance on filing your taxes in 2025, don't miss our bookkeeping and taxes course. You'll learn exactly how to reduce your taxes, simplify your books, make tax filing a breeze, and avoid trouble with the CRA. So thanks for watching, and we'll see you in the next video. Cheers.